Everyone is always talking about investing in index funds, but nobody actually shows you how to do it. By the time this video is over, you will know exactly how to buy index funds and which ones to get based off of your financial objectives. But none of this is going to matter if you don't do the number one thing when it comes to building wealth: getting started. So when you're done with this, stop watching and just go do it. Index funds are a very powerful tool to build wealth passively by using the stock market and not having to do a whole bunch of research. And yeah, lots of millionaires use them. And Uncle Warren, Mr. Warren Buffett, who is the greatest investor of all time, highly recommends the average person to just put their money into index funds in order to grow wealth on the stock market. So what exactly is an index fund? Well, it's just a way for you to invest in a certain index like the S&P 500, for instance, which tracks the average price of the top 500 publicly traded U.S. companies. So investing in an index fund is different from buying an individual stock, because instead of just buying one stock, what you're doing is you're buying pieces of shares from hundreds and sometimes even thousands of other stocks. So the benefit of this is that you get to own a lot of different stocks, and then if just one company does really poorly in a sector that's doing really good, you're not going to lose your shirt over the fact that you just invested in that one company that did bad, and your price is going to average out over the entire industry. So there's two big criteria whenever you're choosing an index fund. The first thing is going to be the expense ratio, which is how much money they are going to take out for management purposes. And you really don't want anything that's much higher than 0.5 or 0.6%. The second thing that you're going to want to check is the performance tracking. And normally they have these laid out right next to this. And this shows what the fund has done in the past 6 months to a year. Sometimes it'll show the 5 and 10 years, which is something you really want to pay attention to if this is a long-term investment. The reason for that is if you're investing in a low risk fund, then it's probably going to return somewhere around 2 to 5%. But if you're investing in a high risk fund, then you want to see that it's averaging somewhere around that 9 to 13%, because the riskier the investment, the more likely you are to actually lose money as well. So it's good to make sure you have a balance based off of the level of risk that you're willing to take. So let's talk about that in a little bit more detail based off what your investment goals are. So let's say you're investing for retirement and you have more than 10 years left. Then firms like Fidelity and Charles Schwab would recommend some type of allocation with 70% US and 30% international funds. An example of this would be like a US stock market or the S&P 500 equivalent funds. So with this retirement portfolio objective, the three different funds that I'm really going to focus on is going to be Fidelity, Charles Schwab, and Vanguard indexes. So you can see in here things like the Fidelity Zero Total Market Fund. If you go into your Fidelity or trading app and you type in FZROX, that's what we call the ticker, and that is going to pull up that fund for you. So it's the same thing if you're using Charles Schwab or you're in a different platform and you're looking for the Vanguard. You can use those tickers to be able to look up these funds and then pick how much you want to invest in them. The second objective that most people have whenever they're investing in index funds is to build wealth as aggressively as they can without having to actively manage anything. The best type of allocation you can get for something like this is a mixture of growth cap, small cap, and international funds. So again, when you're looking at this list, everything that was listed in Objective 1 could definitely apply in here, but you're going to want to put a little bit more of your fund, 50 to 70% of it, into some of these, like the Fidelity Small Cap Index Fund, the ticker being FSSNX. Or maybe look at the Vanguard Small Cap Index Fund, the VSMAX. So when you're going through and looking at these, like I said, make sure that you are considering the top two things when picking these out, which is one, the expense ratio, and the second one being the performance tracking, seeing how it's been doing over the past 5 to 10 years. Now, for people who are really looking at a time horizon that's like 2 to 3 years, you're a short-term investor, you're not really looking to do this for the long haul, I wouldn't exactly recommend index funds because, again, most of these gains are being averaged over 5 to 10 years, and they can be really volatile, especially if you pick one of the riskier investments in the short term, and you could actually lose money. So if you're looking for something that has a really short time horizon that you want to passively invest in and not have to actively manage, then I would highly consider checking out a HISA, a high yield savings account that's earning anywhere from 3 to 5%, or check out a Series 1 savings bond that you can go and buy, dump your money in, and you don't have to worry about it at all. I know those things don't sound really sexy, but they can be great tools to use in order to act like an inflation hedge and keep the value of your money up. All right, so you're excited, you're ready to get going. So how exactly do we buy these index funds? Well, first you need to get online and open a brokerage account with one of these firms that I kind of talked about. Some of the most common ones are Charles Schwab, Fidelity, or Vanguard. There are other good ones out there. These are just the three that I'm focused on. Now, one thing I do want to remind you of is the fact that certain brokers like M1 Finance or Robinhood are not going to offer these funds, all right? They're going to have ETF equivalents, but the fees could be a little bit higher on them. So you need to make sure, if you're not using any of the ones that I mentioned, that you're double checking the performance and the index fees. All right, so let's go through how to sign up for a brokerage account and then how you can sign up to get these index funds automatically being invested in. So I'm going to walk through Fidelity specifically. This is a company that I use and I personally really like. Other ones that are really good would be like a Schwab or a Vanguard, different ones like that. But what you do is you come in here and we're going to click open an account. It's going to give you a couple different options and we're going to start with a brokerage account. So if you already have an account with Fidelity, you can come and, it can bring over all your information and then combine your accounts. But if you don't, we're just going to say no and pretend that this is new. I'm assuming that we're opening this up just for ourselves. This isn't something we're planning on sharing with family or anything like that. So we're going to select just for me. So then we just have to come in, fill out some basic information on ourselves. And then once you've gone through and given them all of your information and they've verified who you are, you're going to have to connect a bank account to this. And then we'll come in here and log in. So then once you've got your account set up, we're going to come up here to accounts and trade, and we're going to come down here to trade. Now, this can sometimes show a partial view. I opened it up for the full view just so you don't see all my account information and things like that. And we're going to come in and we have a couple different options of what we can look at. We can look at individual stocks or ETFs, which is electronically traded funds. We can look at actual mutual funds, whatever the case may be. For now, I'm just going to go with stocks and ETFs. And in this situation, I have to select an account. So I'm going to come in with this. And it's fully invested. That's why I only have $13 in there to trade for the most part. I need to get that money working for me, Got $13.49 just sitting here doing nothing. Need to get that in a fund quick. So then what we're going to come in is we have to choose whether or not we want to buy or sell. Well, I guess first we're going to come in and do a symbol. So one of the symbols you could do if you want, I like this fund QQQ. This is something that invests in the technology sector for me. It's a little bit more of an aggressive fund, but it's done really well. Another one that we could do would be the S&P 500 equivalent, and I, for the life of me, can't remember what the Fidelity ticker is that I just showed you. So if you can't remember, if you're trying to remember like what some of these funds are, you can come in and just Google it. It's a S&P or Fidelity S&P 500 index fund. So we can come in and check on what that might be. And yeah, right here, the FXAIX. So you can go back to earlier in the video. I list all of these out. But if you forget, you can check old trusty Google. Now, the nice thing about this is if we come in here, this is a great way for us to evaluate if this is the fund that we want. So Morningstar is an independent report that tracks the performance of these funds. So remember, this is a whole bunch of stocks. In this particular situation, this is the S&P 500. So 500 of the best U.S.-based companies, and it averages out their performance. So when you buy this fund, you are buying shares in 500 different American companies. So you can come in here and see that overall the rating on this, out of almost 1,300 funds, it's a 5-star rating. Well, that's great. We like 5 stars. The returns are above average, so that's great. And the expenses are incredibly low. So this is about as good as it gets. The risk, it's right in the middle, so that's great. We're not super risky, and then we're not super conservative. And then this is really important. How has this fund done? If you put your money in this and you left it, what has the historical returns been? Well, the past year has been amazing. It's 30%. Over 3 years, it was 11, and over 10 years, it's returned 12%. So this is really great. And you can come in here and look at a couple different things. And by the way, I know I'm showing Fidelity, but Vanguard, Charles Schwab, any other major trading platforms are going to have something like this. So this is just a great way to come in and really look at how this is doing. It'll give you all these fancy charts. This is kind of nice. It shows you, hey, how has it done? So you have, it tracks at the S&P 500, so it shows specifically that. There's another fund called the Large Blend that they have. It's outperformed this pretty much every single year. So it just gives you a little bit of an idea. It tells you, hey, it's primarily 30%, IT stuff. Almost everything's based here in the US, yada, yada. So this is just one way that you can do it. Little cool compare thing. If you're looking at a different fund, you can come in here and type it in and, see like what the historical trend has been versus other ones. So it's a good way to just come in and do some basic research. So now I've done my homework. I've decided, yes, that is the fund that I want to end up doing. So I come in here to symbol and I type in FXAIX. It's the Fidelity 500 Index Fund. So that's what I want. It'll be called something slightly different again on Schwab and Vanguard and the other ones. But this is what we want. So we're going to come in here and then the action is I want to buy it. And then once I do that, assuming that you've already hooked up your bank account and you have put money into it, if you've put, let's say, $5,000 in there, you're going to come in here and say, I want to do $5,000 and invest it. You'll preview the order. Now, I only have $13 to trade. Everything else is already invested. So obviously, I don't have enough in here. But it's going to show you this preview, and then it will give you, or it'll be a slightly different preview, but then you will just confirm the order and you'll be set up to go. Now, if you do see something like this, then what has probably happened is you forgot to, you hooked up your bank account, but you forgot to transfer the money over from your bank account. The other thing that can happen sometimes that people don't realize is you may have done the bank transfer, but the money hasn't cleared yet. Sometimes it takes 2 to 3 days for the money to get from your bank into the Fidelity account. So whenever you do come and set this up, just know that you probably won't be able to buy the same day because it takes a little bit of time for the money to show up from the bank into Fidelity. So that's just something to be aware of. You'll probably have to set up that bank transfer and then you'll have to go through and then just wait a couple days. But once you've done that, you're good. If you found this video helpful and you want to get serious about managing your cash flow and investing, then go to the description below and download this template that I personally use and that thousands of others have downloaded so they can start managing their cash flow and build wealth intentionally.